Nigeria may struggle to secure foreign loans to implement its 2023 national budget, following Moody's downgrade of the country's ratings from B2 to B3. That's from B2 to B3, yes. The downgrade puts Nigeria at par with Angola and Mongolia due to its decline in finances, hence could struggle to fund the ambitious 20.5 trillion naira 2023 budget that solely relies on about 10 trillion naira borrowing to finance it. Similarly, commercial banks and corporates whose ratings are tied to the sovereign ratings of the country are beginning to face possible downgrades. According to the International Ratings Agency, this development could equally impact negatively on deposit money banks, as the ratings agency has also penned down commercial banks and corporates in the country whose ratings are tied to Nigeria's as sovereign ratings for possible downgrades. Let's understand this ratings and the possible implications for Nigerian commercial institutions. Dr. Moody Yusuf is the Chief Executive Officer of Center for the Promotion of Private Enterprises. He joins me now via Zoom. Good afternoon, Dr. Yusuf. It's good to have you on the program.
Good afternoon, Tolu. My pleasure.
First, let's understand what this ratings really means and how it affects us as a country.
Well, the rating is an assessment of the health of the economy, especially from a financial perspective, and the whole idea is to guide investors globally that wants to do business with Nigeria or with any country for that matter. It's also to enable investors globally to be able to, properly construct their business models and to be able to properly also manage their risk. It helps a lot also in risk assessment. So the whole idea is to just present a picture of the health of an economy, especially from a financial point of view. I think basically that is what it is. So it will guide investors, particularly in financial markets. It guides creditors. It guides even the perception of our financial instruments, how risky they are, how what kind of interest rate should be ascribed to them, and things like that. So that is the whole essence of this rating, and a lot of investors have a lot of confidence in those ratings to guide their investment decisions.
I'm seeing a lot of issues around government finances as well as our external position here staring us in the eyes. And Moodys is saying that this is worrisome. So, but in all of this, we still have issues, challenges with regards to revenue, bridging all of the gaps. How well do you think the central bank can continue to defend our external powers or external reserves?
Well, it's a combination of both what the monetary authorities can do or has been doing and what the fiscal authorities can do and also have been doing. On the fiscal side, you can see that the Moody's report also raised issues around the financial health, the fiscal situation of government. Because we all have seen what the budget is like. We have seen the structure of the budget. We know that, we are going to service debt with almost about 6.3 trillion. That's the cost of debt service. The total revenue is about 9.73. That is assuming that we're able to meet the entire target, which I doubt. So we need to discount the revenue target or the revenue provision maybe by about 30%. So at the end of the day, you'll be coming with an actual revenue situation of about maybe 6.5 trillion. So by the time you relate that to the debt service, you can see that the debt service commitment is already almost wiping out the entire revenue, So that means that for you to meet other obligations, you have to go back to borrowing. And now in the budget, we have a borrowing provision of about 8.8 trillion. So if you add that to the current debt stock of about almost 43 trillion, So you are talking about slightly above 50 trillion in debt. So all of these things create very serious fiscal sustainability issues. And in order to also inspire confidence, I mean, observers need to be seeing what kind of policy measures are on the table to be able to stabilize this fiscal position. And again, on top of this, we are talking of a subsidy of about 3.3 trillion or so, and full year subsidy of almost 6 trillion. That's about 10 billion US dollars. And we have an economy that is importing almost $15 billion of petroleum products. So all of this is put together, I think, is what has informed the position of Moody on the fiscal side. Then we have the external sector challenges, which has to do with liquidity in the foreign exchange market. That, of course, is manifest and is already, of course, affecting a lot of investors in the economy. We are seeing what has been happening to the manufacturing sector and other investors with respect to access to foreign exchange. We are seeing how the parallel market is now becoming almost the default market, and the exchange rate in the parallel market is now becoming the operating exchange rate in the economy. That is sending a very terrible signal to investors. And we can see how investors are stuck. Whether we are talking about foreign direct investors or portfolio investors or the airlines, we all can see how their proceeds are stuck in the economy because they cannot move their proceeds out. That again gives a lot of negative signals to the rest of the world. And that is what has been affecting our capital importation. It's currently at an all-time low, So all of these things are not giving a very good picture. And just as you said, the sovereign assessment or the sovereign perception of risk affects, the perception of risk of the individual operators in the economy, including the banking community. So all of these things are rubbing off on practically everybody. We know of companies that have been defaulting in paying their suppliers, not because they don't have the naira to pay, but the dollar is not available to pay their suppliers abroad. So already for a long time, this has even been affecting many manufacturers. Many business relationships have been destroyed. Many businesses have lost their credit lines that they normally enjoy from their foreign creditors. So a lot of damage has been done. So that is what is culminating in the Moody's report. And the earlier we're able to take some steps, to normalize this situation, the better for the economy and the better for investors and the better for all of us as citizens.
So, but before I let you go, now the non-oil space is what was also identified as a major revenue contributor. Government expects to get more revenue from the non-oil space this time, considering what we face with the oil and gas sector. If we have constraints with getting loans, that wouldn't be a good one for us because we won't be able to fund the budget. But do you think proceeds from the non-oil space can help bridge the gap one way or the other?
You see, for investors in the non-oil sector, you can only give what you have. You can't give what you don't have. And tax revenue that you can collect from investors is a function of the health of those investments. If you have an investment environment where most of the businesses are struggling, how are you going to get optimal revenue from them? Revenue is a function of your profits, except for VAT, which perhaps, again, you can deduct from whether the company is making profit or not. But company tax, education tax, and the rest of them are functions of your profit. And we can see what is happening to many, many sectors in the economy. Their profit performance is not doing very well. And look at even the variances in revenue targets for 2022, going by the result that was published by the finance minister. In practically all the revenue heads, there are large variances, negative variances, shortfalls in meeting targets, some as high as 60%. So the performance of business and the performance of revenue is a function of the health of investors or investment in the economy. If the investors are not doing well, where will the revenue come from? So from both the policy and structural angles, the investors are facing a lot of challenges, and we are not addressing those challenges sufficiently. Look at the challenges, look at the uncertainty that has been created in the foreign exchange market. Look at the volatility, look at the uncertainty, look at even the transparency problems that has been created. Then on top of that, we have all this problem of oil theft. We have problem of subsidy in petroleum subsidy, although that's a bit politically difficult, but it's still an issue that we ought to have confronted long before now. That has been compounded by the foreign exchange subsidy. So these are fundamental issues. If domestically we are weighed down by all these fiscal challenges, externally we're having very serious distortions in our foreign exchange management, then the economy has a major issue. So not all the issues are really structural. Of course, we have structural problems, but we have quite a lot of policy issues that also need to be addressed.
Where do we go from here? A lot of issues here. What sort of synergy, what sort of quick wins can we have? I know we've mentioned this before now, but because many will say it's a pre-election year and a lot of shift away from governance, politics will be everywhere, will be on the floor, and everyone wants to talk politics at the moment and not economic development. What effect will this have on all of these downgrades and upgrades and all of these figures from agencies like Moody's?
Well, even though we are in an election season, as it were, but those who are in government still have a responsibility to govern properly, to ensure that our institutions perform optimally the way they should perform. They still have that responsibility. And the president also even alluded to that when he was, addressing the ministers at the last retreat that they had, that they should be focused on their responsibilities. So that should continue to happen. But if the central bank continues the way it's going with its policies, particularly around forex, then there may not be any end in sight as far as the external position is concerned. Then for the fiscal position, again, it's a very tricky matter, because unless we deal with the problem of this subsidy, unless we deal with the problem of the cost of governance, unless we deal with the macroeconomic instability that is created by this ways and means finances by the Central Bank of Nigeria, we cannot have a stable macroeconomic environment. So those problems are there. Whether this can be sorted out between now and February next year, I have my doubts. So we have to continue to advocate for better environment and better things to be done. But clearly, I'm not seeing anything on the horizon that will, bring any radical departure, from what we have now into something that is much more acceptable in terms of investment and growing the economy.
In 1 minute, Dr. Yusuf, subsidy was also identified there. What is your take with regards to that?
So the subsidy is not sustainable. We may not be able to remove it in one first sweep, but we should begin from now to ease ourselves out of it. Otherwise, the whole system will just collapse on everybody. I mean, look at the way the whole economy is. We don't have revenue. Revenue has been consumed by debt. You have a budget that is funded 100% from borrowing. How sustainable is that? How are you going to fund infrastructure? How are you going to fund the security agencies with all the challenges of insecurity? Now we have the problem of flooding. All of these things they need to be funded. So we need to address those issues, see how we can begin to exit gradually from this subsidy, and also see how we can bring a lot more transparency into governance, into the management of public finance. and see how we can remove institutional bottlenecks to investments and to investors. Because in all of this, investors are still facing a whole lot of problems that are not related to structural issues, that are not related to macroeconomic issues, but they are related to the agencies of government, regulations, institutions, and all of that. And even corruption. Those problems are there. I mean, you don't need the World Bank or IMF to be telling us on how to deal with that, for instance. So, but unfortunately, the outlook is not looking good at all.
Indeed, it's a good way to live it. Dr. Moody Yusuf is the Chief Executive Officer of the Center for the Promotion of Private Enterprises. Thank you so much. It's good to always have you on the show. Was also the immediate past DG of the Lagos Chamber of Commerce and Industry. Thank you so much.
Thank you.
Enjoy the rest of your day.